Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. The title and thumbnail of the video might have shocked you. You're wondering, is this for real or is this really a bad joke? It's not a joke. I did decide to sell off my entire Canoe EIT position in my portfolio. Of course, if you're an Inner Circle member, you've already known this because you know what I do on a daily basis if I do anything. And by the way, just a reminder, if you want to join the Inner Circle, just click on that little join button. But in today's video, I figure I do a completely separate video right before my next portfolio unveil video to really explain, so it's not that much of a shocker, and go through the explanation. I don't want to do that in the portfolio unveil video where it's going to be too long. I'm going to tell you why I decided to sell off my EIT position. I'll tell you what I bought instead, all my reasoning behind it. We'll quickly review the Canoe EIT income fund because I still think it's a fantastic fund. I still think it's one of the OGs in the income world. So you might be asking, why the hell did you sell it? What are your reasons? What did you buy instead? Well, let's go through it right now. All right, everyone. First of all, let's go through what I did. That I sold it, and also what I bought instead. Right. So let's start with what happened. So I did have a $40,000. That's my book price position in EIT. I sold it. I actually made a $6,200 capital gain. When I say capital gain, I'm not counting any of the income, right? This is just stock price, book price versus sell price. I actually made 62.25 capital gain. All that other income that I've made with EIT throughout the years, that's extra. It's not included in this. This is just from buying low to sell it at a higher price, the capital gain. What did I buy instead? So basically what I'm trying to say is the proceeds of this sale were about $46,000, right? So what did I buy instead? Well, the biggest chunk that I bought is USCL. I also bought, which is kind of like the S&P 500 with covered calls and leverage. And I'll go through it in a second. I also bought 5,000 in BKCL, 5,000 in ENCL. BKCL is the 6 banks with covered calls and leverage. ENCL is top 10 oil and gas companies in Canada with covered calls and leverage. I also bought $5,000 of GDV, which is a split share fund that invests in some of the best dividend stocks all over the world. That's your 45,000, right? So 30, 35, 40, 45. So 30,000 in USCL, 5,000 each in BKCL, ENCL, GDV. And then I had little over $1,000 left over, which I just put in YTSL, the Tesla one. So let's go through exactly what happened. So EIT, listen guys, I still think it's an amazing, great fund. It's one of the OGs. It is, like it says on the title, one of the largest closed-end investment funds in Canada. It is a closed-end fund. It is not an ETF. It's actually trading at a discount right now. It's always trading at a small discount, so it's worth $12.93. The current price you could buy it at is $12.65. It's a $1.20 annual dividend rate. It's been that way for a really, really long time. So kind of do a summary of EIT, might as well. So 120. Let's just check the yield based on $12.93. You're looking at a little over 9% yield. So my book price, by the way, was about $10.65. I was actually making over 11% yield on it, and I sold it at 12 something to make that $6,000 capital gain. So what did I buy with it? Well, the biggest chunk I bought is USCL. I really like USCL. This is a relatively new fund. It's just a leveraged version of USCC, and it's kind of like the S&P 500 with covered calls and 25% leverage. At that time, it was over 13.5% yield, which is much higher than the 11 I was making with EIT. So I bought USCL as the primary, 30,000 of the $46,000 went in USCL. But because EIT is, there is some Canada in there. It's actually mostly Canada. By the way, if we look at the, not the sector, the asset mix, you'll see it's 53% Canada, 46% US, a little bit of international. So, a lot of financials, energy, those are the top two sectors in Canada. But there's also healthcare. What there isn't much of is technology. You'll see that at zero. So this is really kind of like a value stock fund. And by the way, it also has 20% leverage. EIT does have 2 preferred shares, and each of them give 10% leverage to EIT.UN. It's not exactly a split share fund, but it's really set up like one. It's very similar to one where it has preferred shares, and that's where it gets its leverage. So in case you didn't know, EIT does have two preferred shares, which will probably give you 5 or 6% yield, but it provides 10% leverage each to EIT. Hence, EIT.UN is leverage 20%. So That's what I got. That was my biggest position, that biggest swap I did. But because it also had Canada in EIT, I decided let me go a little bit, get some Canadian exposure. I don't want to go all with US. So I did put 5K in BKCL and 5K in ENCL, which is financials and energy, which is the two biggest sectors in Canada anyway. So this is, I decided to go with those two. A lot, very, very high yield as well, way over 11. The last 5,000 I did was put it in GDV, which is a split share fund that has really, really high yield. And I actually got good timing on it because it's been going up lately. And GDV kind of reminds me of EIT a lot, because EIT, if you look at the strategy, if you look in the FAQs, you'll see this very interesting line here. The current portfolio manager has employed a total return investment strategy that generally seeks to generate returns from dividend growth securities, which is dividend stocks that tend to grow their dividends over time. That's exactly what GDV does. They are looking for global dividend companies that grow their dividends over time. And they actually have a lot of the same companies, by the way. So 5K in here, also GDV, trading at a really nice premium, very, very smaller premium than usual. So I've been buying some GDV lately. So 5,000 in that, then I had about $1,000 left over, which I just put in my super fund YTSL, which was also a good move because they recently increased the distribution, which is awesome. So that's what I did. Now you're going to ask myself why. Let's go through the why. So the main reason I would say this was really an opportunistic move to get more yield and get more monthly income. That is what my objective, my portfolio's objective is and will always be, to generate maximum income. So by doing all these moves, guys, I've increased my monthly income by $218. So a massive boost to my monthly income and to my yield, which is always going to be my number one priority. Also, it was one of the only funds where I actually had a nice big profit on it. So not only am I getting an income boost, a yield boost, I made a $6,000 capital gain on EIT, which is also fantastic. Another reason is I feel comfortable myself personally to go all in on covered call strategies, covered call ETFs. Not everyone is, because they tend to not really grow that much because they're not designed to. But EIT, Canoe EIT, I don't think of it really as a covered call strategy. It is income oriented, like the name says here, right? Designed to maximize monthly distributions. But I don't think they do covered calls. Maybe they have the ability to do the covered calls, but it's not really a covered call strategy. It's more of a leveraged dividend growth strategy, right? Just like we saw in the FAQ here. So that's another reason I'm okay to go with all in on covered call strategies. Some of you say, I like to have some growth stuff. I feel EIT is really, you could consider it kind of a growth investment, because I don't think they do much covered calls, if any, at all. Another reason why is, this is just a very, very small reason. Probably, I don't really care that much about management fees. I care mostly about the yield and the return. And by the way, EIT, I have to say, still the king, right? Still fantastic, phenomenal total returns here. And this is why I really feel that they probably don't do covered calls, because covered call ETFs typically don't have these long-term amazing returns. I mean, look at the last 10 years, 10.41. Since inception, 9.23. So it's right there with the S&P 500, and it is destroying the S&P TSX composite, which is basically the overall Canadian market. But it does have a lot of US exposure in here, which typically beats Canadian exposure. So performance is really, really well. I'm not knocking that at all. Management fee is pretty high with EIT, though. We're talking about 1%, I believe. I think it says 1.1% here, but if you click on fund profile and get this page, you see that the management fee is 1. Of course, the MER is going to be much higher because it's going to include the leverage costs. Without the leverage, you really see the big jump with the leverage and without the leverage, right? Interest expenses means leverage. So, this USCL has 65 basis points, 0.65 instead of 1. So it is lower fees as well. So that was one tiny consideration that I just have to mention. Another thing is that ETFs are more efficient as well than over closed-end funds. They're easier to understand. They're more liquid, things like that. But they're very, very tiny, small, minor reasons. Another reason I have to say, I'm starting to really prefer U.S. equity over Canadian equity. the biggest swap I did, like I showed you, was in USCL. I'm not going to abandon Canada. I think, just by having BKCL and ENCL, it pretty much covers most of the Canadian exposure anyway. I did put a little bit in there, but I am preferring mostly US exposure instead of Canada. It just outperforms. It just has a more diversified economy. Canada is very cyclical, a lot of financials, a lot of energy, has no healthcare, no technology, barely any of that. So I find the US market is always going to be king long term. And also, I do prefer index investing over active management and stock picking. And if we look at the stocks of what EIT actually has, if you look at the top 25 stocks, which makes up most of the fund, a lot of these stocks are going to be in either the S&P 500 or in, Canadian bank. Here's TD, here's Royal Bank, here's restaurant brands. You have United Health, and here's Tourmaline. This is the number one position. And guess what? Tourmaline is in ENCL, right? So it's a lot of stock. Here's Wells Fargo. So it's a lot of stocks that I already have access to anyway. So I feel like, here's Barrick and here's Johnson & Johnson. You'll recognize a lot of them. So it's not like I'm missing out on any special exposure. So that's another small reason. But I have to say that the biggest and by far the main reason was because I'm a yield investor, and this is an opportunistic streamlining move to make $200, $218 more a month, guys. That's literally my number one, number two, and number three reason. And also because it helped that I was in a capital gain. So I made a capital gain, which is always good. So really it's an opportunistic way to get more yield. That's why I did the swap. I still love EIT. I think it's a fantastic fund. Don't just sell it on my account. I know many of you have done it already and or thinking about it, but I have to admit, this fund, it is income oriented. It's designed for that, but I'm okay with going with really the full covered call strategies to really maximize the income. And it just turns out that now with all the great horizons ETFs that have come out, there's a lot higher yield out there that you could get with kind of the same exposures. I do like the US better. So hopefully this video was informative too for you. I'm not trying to hide anything. I'm always going to be open and honest with what I do and give you the reasons behind it. But don't just do something because I do it. You got to make your own decision. I still think that this is a fantastic fund. And hey, maybe at one point I'll get back into it if I see it at a really, really big discount. Maybe they'll raise the distribution. Who knows? It's been 10 cents a month forever. Just my luck, right? We'll see next month. Maybe they'll raise it to 12 cents and I'm going to be like, oh crap. But that's just the game, right? It's just a game, and that's pretty much it. So give me a thumbs up. I would really appreciate it. Stay tuned. The next video is going to be, or shortly soon after this one, the portfolio unveil video. So at least you won't be super shocked about it. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.